This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through the business news stories you need to know about from the continent and beyond. But first, a quick run through the markets for you. So far in 2021, very young year, but South African equities have risen by the largest margin among the bourses we track here on the program. The only one that's done better, the EGX 30 up north in Egypt. That's up 7.1% so far in the year. The all-share in the top 40 have gone up by at least 6.1 and 6.3% respectively in the last 5 weeks or so. Platinum miners have, of course, boosted that rise by a significant bit. Firms like Implats and Sibanye-Stillwater both closed 1.3% higher today. Here's what's coming up tonight. We'll have an outlook of the mining industry for industrial metals in 2021 as the annual mining Indaba comes to a close. COVID-19 costs and regulations are threatening cross-border trade in East Africa. And the Amazon founder Jeff Bezos is stepping down as CEO, but what's next for him? All that and more is in the pipeline for you tonight. Let's start in South Africa, where the Minerals Council has offered to support the government in distributing vaccines to both mine workers and their families. By working with the Labour Ministry, the Minerals Council aims to vaccinate 60 to 80,000 people daily. The goal to vaccinate some 3 million people in 60 days was announced at the annual mining Indaba. Now, it may seem like a tough target to meet, but the mining sector has been doing relatively well in curbing the spread of COVID-19. By the 21st of January, over 380,000 people had been screened, 104,000 tests had been carried out. The test rate for the sector as a whole, over 22%, and that's much higher than the country's cumulative figure of 13.6% and a global test rate of 18.2%. Now, the pandemic obviously is a key factor affecting the performance of commodities in 2020 and 2021, both on the supply and the demand sides. But what exactly is the outlook for mining and refining industrial metals? South Africa, remember, does provide a significant percentage, for example, of the platinum group metals we use worldwide. Let's examine this in detail. Kwasi Mpofu is a metals analyst at Bloomberg New Energy Finance, who joins us live from London. Thank you for your time this evening. Given the pandemic, metals are doing relatively well. Spot gold up 16% in the last 12 months, platinum up 13%, copper forwards in London up over 40% over the same period. Is that a reflection, though, of a return to pre-pandemic demand, at least in some markets, or is this more a reflection of a constriction in supply?
Thanks, Ramah. Actually, that was a beautiful list you gave out there. To also add to the list, we've got lithium carbonate, which is used in batteries, going up by 46%. Let me also add cobalt sulfate used in batteries, also going up by 59%. And even nickel sulfate, which is also used in batteries, going up by 14%. So absolutely, there's a bull run. And like you precisely mentioned, it's probably due to the fact that we've gone back to pre-pandemic levels. But what are the underlying factors? So what we are seeing is that last year, COVID did destroy demand for these metals. Initially, in the first half of the year, because there was uncertainty in the world, there was lockdown. But what we saw in most of these metals is that there was a strong demand off the back of countries' recovery, such as China, and to a large extent, the US. So we saw strong recovery. And what we know is that whenever there's economic recovery, there is demand for metals. And when there's demand for metals and supply is constricted one way or the other, it results in prices increasing. So that is it in terms of demand. With supply, you rightly mentioned that supply has been constricted. So what we did realize is that most mines actually did handle the pandemic pretty well. In Australia, where it was considered, quote unquote, an essential activity, most mines operated 24 hours or still maintained production levels. In South Africa, we saw production being cut back a while in Q2, but then we saw a quick comeback in Q3. However, overall, where we are seeing the supply constriction is not actually on the mine, it's at the ports. And it would interest you to know that there is currently a global shortage of containers for moving freight. So that is actually restricting the movement of these materials. And over the last 4 weeks, we've seen these two impacts actually drive up prices for metals like bulk metals, like the lithiums and the cobalts, and then most importantly, the nickel. So yes, there is a demand factor there, which was off the back of strong recovery from economies like China. But then also there was supply constriction as a result of port produce ports operating below capacity, and also the fact that there's global container shortage in the world.
Indeed, and that's a whole different story by itself, fascinating as that may be. But what about the long-term picture? Because according to S&P, exploration budgets, at least for mines in Africa, have fallen by about 10% to a 4-year low last year. Is this part of a long-term trend? And how do you expect that to hit the mining sector and future supplies for these industrial metals?
Yeah, so certainly once exploration is cut back, you do realize that it's going to impact long-term supply, simply because mining is a continuous process. Once you dig the dirt out, you need to replace these resources. And once you are not replacing these resources by making new discoveries, obviously down the line is going to be impacted. But we don't see that really happening in the short term. Probably in the long term, when resources and reserves have run out. But what you should have at the back of your mind, like what you should notice, that mining is a key sort of a key pillar for most African economies, key employer, key income earner, key foreign exchange earner for most countries. And it's very imperative that mining does continue in these countries. And certainly with this reduction in exploration budget, in the long term, we see this activity actually impacting most of these economies like South Africa, like the DRC, like Botswana, like Ghana that I mentioned in the long term. But in the short term, there is enough resource reserve to meet production, and we don't expect that to be to impact production in the short term.
Let me get back to one of the things that you mentioned when you responded to the first question I asked. We're seeing a lot more countries banning the use of vehicles powered by fossil fuels from 2030, 2045 going forward. What's the outlook for a commodity like cobalt, huge producer in the DRC, given that that particular commodity is used in lithium-ion batteries that power a lot of the EVs that we're seeing on the road today?
You did mention cobalt. So cobalt, 70% of cobalt does come from Africa, the DRC to be specific. And the long-term trend or the long-term outlook for cobalt is quite positive. So last year, the world globally, we mined about 120,000 metric tons. And by 2030, that is going to increase 2.5 times what the current market size is. That is incredible. Like just demand from lithium-ion batteries alone is going to double. And what that means is that new projects need to come online. And most of these projects that will be coming online to meet that monstrous demand that will grow would come from the DRC. So overall, we're going to see like there is an uptick, there's an upside for cobalt in the DRC and also in Morocco as well. But then countries need to have the right policies, the right infrastructure to be able to support these new mines that could come online and potentially meet the demand. And also just to loop it back in a work we did where we looked at 25 countries around the world that have done quite well in the lithium-ion battery space. So we ranked them. Who is leading? China was leading. And down at the bottom, we have South Africa somewhere in 19th and the DRC, I think, in the 24th or 25th. That was not encouraging, simply because aside the cobalt that the DRC have, there is not much infrastructure to support downstream activity. There's not much infrastructure to support demand. There is policy uncertainty among other factors. So as much as I'm very optimistic about demand growing and the fact that the DRC can step up and meet supply, these can only be achieved within an ecosystem where policy certainty is clear. There's a lot of feasibility. We need to identify where these resources are. Other than that, demand will grow, the supply will go elsewhere, and Africa will lose out. And I think I needed to highlight the fact that institutions need to step up on this feasibility. And I think the African Development Bank is actually doing quite an interesting work in that space where, for example, if I gave $1 billion today, which part of the value chain would you invest in? There's not that much knowledge on the continent. And it's imperative that we create this knowledge to be able to support economies like the DRC, South Africa, who could benefit from this upcoming demand and also ensure that they are ready for this growth.
This is a bit of a left field question, but I know there's been some work in trying to develop batteries that do not rely on cobalt, an alternative to the lithium-ion ones that we have on the market today. Is that, in your analysis, is that a medium-term threat? Is that a long-term threat? Or is it not really an issue that will affect demand for this particular metal between now and, say, 2030?
Yeah, so I think there's a famous quote by Elon Musk where he talks about eliminating batteries from lithium, eliminating cobalt from lithium-ion batteries. And the fact is that it will be very difficult to achieve that over the next 10 years, particularly for the NMC cathode chemistry that we covered mostly. So there are other types of battery chemistries that do not use cobalt. So we have, for example, the LFP, which is a lithium phosphate ion battery chemistry. But then the NMC, which is very popular among most European countries, cobalt will still play a key role. Although I must highlight that the loading for cobalt in these chemistries have reduced over the past decade. And it's for two reasons. The sustainability challenges, talk of human rights, talk of child labor, among other issues in the DRC, have pushed companies to innovate to include less and less cobalt in batteries. However, you should also add that prices is a key motivator for battery companies gradually shifting away from cobalt and replacing with manganese. But at least over the next decade, demand is going to grow to about 300,000 metric tons off the back of the fact that EV demand is going to grow astronomically. And even though individual loadings of cobalt reduce in vehicles, overall cobalt demand will grow. Indeed. So yes, technology would be a key player in the reduction of cobalt in batteries, but the overall outlook is very positive.
Indeed. We'll have to leave it there, Kwasi. Thank you very much for your time and your input from London. Now, let's move on to South Africa. Hundreds of companies over there have been affected by an interesting cyber fraud incident, which has resulted in the compromise of over 4 million IP addresses. A new audit published by the African Network Information Center shows that over the last decade, IP addresses have been misappropriated, and that's left many companies' websites and databases vulnerable to security breaches. CGTN's Travis Andrews takes up that story.
It's been called the Great African IP Address Heist that has claimed some of South Africa's biggest companies as its victims. More than 4 million IP addresses have been stolen from the African Network Information Center, which is responsible for managing and allocating IP addresses on the continent. Most of the addresses stolen came from South Africa and included very valuable legacy addresses.
These are IP addresses that are quite valuable, that were assigned to companies in the very early days of the internet, and they don't attract annual membership fees or any other kind of renewal fees from Afrinic, which makes them quite valuable for companies who would like large amounts of IP addresses and not have to be beholden to anybody for those IP addresses.
Companies that were affected include Nedbank, Nampak and retail giant Woolworths, who had 3 IP blocks equating to 200,000 individual addresses stolen. Even the City of Cape Town's Directorate of Information Services was affected, as well as the Free State Department of Education, which lost addresses worth over $1.3 million.
It is roughly 82 million US dollars. The extent of this crime, and that's assuming an IP address is worth roughly $20 US each. That was a conservative estimate that I've received from people inside the industry. And these IP addresses, this is what they go for on the open market, on the reseller market. This is not like some necessarily shady market.
Even though the theft of IP addresses affected so many companies and organizations, experts say most were not even aware that the actual fraud even took place. While more than 1.5 million IP addresses have already been reclaimed, most others are still pending until the rightful owners have been identified. The sheer scale of this fraud, though, has underlined the enormous negative impact cybercrimes are having on South African companies. Travis Andrews, CGTN, Cape Town.
Zimbabwe's Reserve Bank says it will introduce higher denomination banknotes, starting with a 50 Zimbabwean dollar bill, in order to ease a long-running cash shortage. The Southern African country spent the better part of a decade using the US dollar, among other foreign currencies like South Africa's rand, after failing to tame hyperinflation. The Zimbabwean dollar was reintroduced in the middle of 2019. Here's CGTN's Farai Mukutuya taking up the story.
The Reserve Bank of Zimbabwe will print a new $50 note, the second time it has launched higher denominations of its currency in less than a year, following the release of $10 and $20 notes in May and June 2020, respectively. The move is aimed at addressing long-running cash shortages and increasing the stock of physical notes in circulation.
Internationally, there is an acceptable balance between cash and the money supply in the economy. So that balance is normally between 10 to 15%. So the cash ratio in Zimbabwe was around 3%, but less than 5%. And Reserve Bank has indicated that it was going to restore the cash balance to about 10%.
Given Zimbabwe's history with hyperinflation, the release of new banknotes is inevitably accompanied by fears that it could cause inflation to go up. However, analysts have allayed those fears, citing the central bank's measured injection of cash into the economy as well as its tight leash on money supply.
What causes inflation, or what has been causing inflation in Zimbabwe, is not mainly cash, but the increase in the bank deposits occasioned by mainly treasury bills in the past and credit expansion at government and private sector level. So the mere increase of cash without increasing the money supply in the economy does not result in inflation.
Inflation, which closed 2020 at about 340%, is expected to continue its retreat on the back of stringent fiscal management as well as a stable local unit, which continues to hold its own against a greenback on the weekly foreign currency auction.
The official rate has hovered at around $81 to 1, while there have been little fluctuations on the previously volatile parallel market, where rates have remained within the 100 to 105 to 1 range for several months now. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
And to the world of telecommunications, Airtel Africa will focus on growing in the markets in which it already operates on the continent, and it won't be bidding for an operating license in Ethiopia, where the nation of 110 million people is opening up its telecommunications sector to foreign capital. Africa's second most populous nation is home to one of the last remaining closed telecoms market on the continent, and it plans to sell a minority stake in state-owned Telecom within 9 months. The country has also asked for bids for 2 new operator licenses in a process that was expected to start last month. Airtel Africa says it sees more room to grow in the 14 countries it already has a presence in. Nigeria is Airtel's biggest single market on the continent. Airtel Africa's 9-month reported revenue is up by 13.8% to $2.9 billion. Revenues in Q3 rose by nearly 20% year on year.
We have a lower market share in Nigeria, Congo, DRC, Tanzania and Kenya. And our entire current focus is on these countries in order to grow. We are not looking at bidding for Ethiopia at this time. People are also very clear and very conscious that they need to keep their mobile number, and they're trying to get their national identity numbers registered. So all this is, but I do believe that this could require a little more time, and we may not be able to complete the full exercise. In which case, after all efforts, if we don't manage by February 9th, then we will, I am sure, discuss with the government and request for some extension.
Speaking of Ethiopia, let's start there with our company news wrap. The Ethiopian Communications Authority has extended the deadline for suitors to submit their pitches to enter the mobile money market and compete with the incumbent, Telecom, to the 5th of April from the initial deadline of the 5th of March. Alongside issuing 2 new licenses, authorities also plan to sell a stake, as we mentioned, in Telecom. Still in East Africa, Kenya's national airline has partnered with a leading aircraft maintenance company, Avianor, to repurpose its aircraft cabins for cargo operation. The repurposed aircraft are referred to as freighters, of course a conjugation of passenger planes and freighters. Now, the airline says this is the first ever repurpose of that kind on the 787 Dreamliner, making it essentially a world first. Kenya Airways started repurposing its planes in December last year. It wrapped up the process in January. The South African retailer Shoprite has asked the High Court in Kenya to lift an order stopping its planned exit over a petition filed by a shopper. The shop in question claims to have been injured in one of its branches. The retail chain said the continued existence of the order is causing it massive financial losses, and it's likely to expose it to further lawsuits. The supermarket said in court documents it's willing to deposit $300,000 in a joint income earning account to act as security. And finally, Google's parent company Alphabet saw record revenues for the second straight quarter despite the pandemic as advertisers unleashed their spending during the holidays. Cutbacks by travel and entertainment advertisers were more than offset by new spending from online retail clients and others during the lockdown. Google's advertising business, YouTube included, accounted for 81% of Alphabet's $56.9 billion in fourth quarter sales, up 23% year on year. That's a run through your company headlines. You're watching Global Business Africa. Plenty of content coming up, including this. COVID-19 costs and regulations are threatening cross-border trade in East Africa. Nigeria's central bank says it spent over $20 billion trying to cushion the economy from the shocks of COVID-19.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference. Welcome back to the program. Now, a lack of harmonized systems at borders is disrupting cross-border trade in East Africa. COVID-19 tests are priced differently in each EAC partner state. Containment measures also vary widely. Trade experts are now warning that this could, in total, affect the implementation of the Continental Free Trade Area if regional governments cannot agree to common procedures. With a perspective from Kampala, here's CGTN's Hilary Ayesiga.
Seguya Bukenya exports eggs to Kenya. He says since the outbreak of COVID-19 in March last year, he has lost about $40,000 in profit.
After testing for COVID-19, I have to wait for the results. Sometimes they can hold you for 14 days in quarantine. So such delays affect our business because we deal in perishable goods.
Seguya says the measures imposed by countries to control the spread of coronavirus are affecting business activity. And thousands of traders like him are struggling to stay afloat.
It's a total loss. We are cheated at the border. A transporter will tell you they've tested him at a higher fee. You have to pay it in Tanzanian currency on top of paying clearance fee. We have incurred a lot of losses during this COVID-19 period.
Regional governments instituted various measures such as curfews, mandatory testing at every entry and exit, and self-isolation in case of a positive test. Before the outbreak of COVID-19, this place was busy with all kinds of activity, but now business has slowed down because of the pandemic. The country's Export Promotion Board is now worried that government could fail to hit this year's revenue targets.
Informal trade has on average been over $550 million per year, and we are not sure it can be more. $550 million. I have looked at statistics, and I don't think we are going to get half because I'm looking at 3 quarters, and the 3 quarters of informal trade, I am not looking at at even 200 million US dollars. So it was tremendously affected.
But Uganda's trade minister says the government is cautiously easing restrictions to boost trade.
Reopening or opening business premises is also an advantage in a way, because you remember all those were locked. URA has also reduced on some of the requirements that you are supposed to meet.
For Segui and others, their only hope now lies in how fast regional governments can access the vaccine. Uganda has already placed an order of 18 million doses of the AstraZeneca vaccine from India. Perhaps this could help contain the pandemic so that business begins to flourish. Hilary Isga, CGTN, Kampala, Uganda.
Speaking of the Continental Free Trade Area, it finally formally came into effect on the 1st of January 2021. Now, the CFTA, to recap, aims to create a single continental market for goods and services and also increase intra-African trade by cutting tariffs drastically on several categories of goods by approximately 90%, and needs to do that by harmonizing trading rules at a continental level. CGTN's Yasser Hakim caught up with Dr. Amani Asfour, who's been voted in as the president of the Africa Business Council, to explore what's needed to make the CFTA achieve these ambitious goals.
The Africa Business Council is established by the Decision Summit of the African Heads of States. It's as an organized private sector. It's an inclusive business council that includes all the regional economic blocs. We intend actually to have our strategic plan to see how we involve, to have all the private sector in the continent, to make sure that first we have an advocacy campaign that we are leading currently for public procurement, how our African continents, our African governments would procure from African private sector. That's one. Number two is build the capacity of our African private sector for industrialization.
What are the main challenges that face the private sector when trying to expand within the continent? And you as a businesswoman probably has faced it yourself.
There are several challenges that is really on different levels. If we're talking about the infrastructure, which is a very important, and it's very important because we need roads, we need networks, we need maritime, we need aviation, so we need technological infrastructure with reference to our IT communications. We need political engagement, public-private sector partnerships, and most always is information, because as we all know that we have lack of missing information across the whole over the private sector. How do we achieve the business linkages? How to make sure of an inventory of their existing resources on the continent?
How do you see Egypt's role in trying to lead some of these initiatives, or trying to expand or increase trade and production and investments within the continent as well?
Now, Egypt has also a great role to play because we have in Egypt there is a lot of scientific experience that can be promoted to our African continent and exported to start industrialization within the continent, to start investment. Even and there is now an academy at the Arab Organization for Industrialization that is training our African sisters and brothers in the private sector for electronic machineries. In Egypt, we have a lot of industries that could be exported to our African continent and invested in. We have 480 industries for medical consumables and supplies, 165 pharmaceutical industries.
You've been the president of the COMESA Business Council. What will happen with the COMESA and the Business Council now that we have the ACFTA?
COMESA Business Council is 21 countries, Common Market for East and Southern Africa. Under the ACFTA, we will have actually a pure harmonization among the REX business councils. This will be coordination among our business council, Economic States for West Africa. They have already harmonized a lot, and they also have at least one currency. So it is building blocks for the ACFTA. It's complementing each other.
Thank you very much for joining us. It's been a pleasure talking to you today.
Tunisia's Prime Minister, in the meantime, has promised to carry out economic reforms amid unrest in the North African state. Here's CGTN's Adin Chouachi with that story.
During a plenary session in Parliament,
Prime Minister Hisham Mishishi said that improving the business climate and supporting entrepreneurship are among the top priorities of the new government.
In the first half of 2021, the new government will seek to review authorizations and address obstacles which businesses encounter. The latter will be afforded access to a package of financial and fiscal incentives in a bid to encourage youth in particular to generate wealth and foster entrepreneurship.
The Tunisian Prime Minister says that reducing legislative and regulatory burdens will help create wealth and boost investments.
We have a clear strategic vision to overhaul the development model with the aim of putting the country on the right track and creating wealth through Tunisian youth who keep abreast of digital technological advances. We have the firm conviction that we cannot build a new economy while using old tools. There is need to give a boost to promising sectors and preserve gains and experiences in others.
Mishishi also reacted to the wave of protests which continue across Tunisia. He stressed that it is necessary to listen to young people who express their dissatisfaction with real sincerity and to endeavor to find long-term solutions to their problems.
The protests are justifiable. This is the result of the worst economic and social situation in decades. The state's indebtedness could hit 100% this year. The unemployment rate among youth is unprecedented. Tunisian youth are fed up and desperate. The poverty and the lack of development in all regions is alarming. The government must address all these issues as soon as possible.
Tunisian authorities have pledged to reform the public sector and improve governance. The structural reform will help alleviate the burden of public enterprises on the state budget. The Tunisian Prime Minister also said that the rationalization of the subsidization system will be an additional priority. Hisham Mishishi noted that his cabinet plans to secure a transition from the subsidization of products to the consolidation of incomes. Adnan Shawishi, CGTN, Tunis.
Now, Nigeria's central bank says it's committed over $23 billion into the economy through various means ever since Africa's most populous nation reported its first case of COVID last March. Now, the move is part of efforts to mitigate the economic damage that the pandemic has caused. Nigeria did slip into one of its worst recessions in several decades last year as lockdown measures, a steep decline in oil prices, all combined to shutter businesses, cut wages and jobs while reducing foreign income earnings. CGTN's Kelechi Emekalam has this report from Abuja.
The International Monetary Fund, the IMF...
Central Bank Governor Godwin Emefiele spelling out measures towards stimulating Nigeria's economy at the first Monetary Policy Committee meeting in the capital, Abuja. From the total fund, $17 billion credit facility went into boosting the fight against COVID-19, while about $5 billion was spent on mitigating the impact of the pandemic. The Apex Bank also retained all its monetary policy parameters, including the benchmark interest rate at 11.5%. It's all in an effort to jumpstart growth.
The committee's current priority remains to quicken the pace of the recovery through sustained and targeted spending by the fiscal authority, supported by the central bank's interventions. In this light, it was thought necessary to increase collaboration with the fiscal authorities by providing complementary spending to finance productive ventures in a bid to improve aggregate supply and reduce prices.
The COVID-19 lockdown disrupted economic activities. Many in Nigeria had their sources of income partially or totally cut off. Nigeria's economy too slid into recession by the second quarter of 2020. The central bank's interventions seek to help the nation spend its way out of recession.
And that was why you saw a resurgence. In the second quarter, we went to minus 6.1, but the third quarter, we came back to minus 3.6, something like that. And hopefully by the fourth quarter, we'll be climbing out of that recession. If we didn't have this intervention, it could have been worse. The damage to the economy would have been worse.
There was some kind of stimulation in terms of grants, in terms of aids, in terms of allocations to ministries, departments and agencies, in terms of salaries still being paid. These funds is going to be a reason why we'll quickly get out of this recession. Do not forget, the first time we went into recession, it took us about 2 quarters for us to recover. But perhaps these funds are going to contribute to our ability to quickly get out of this recession.
Despite some gains, the new wave of the pandemic is threatening recovery efforts. Government's been considering another lockdown if cases continue to spike. But the Apex Bank insists that another lockdown would have dire consequences on the economy and the gains recorded so far. Instead, government's been advised to enforce all COVID-19 safety protocols to reduce infection as the economy makes a gradual recovery. Kelechi Emekalam, CGTN Abuja, Nigeria.
From West Africa to East Africa, where Tanzania's government says the construction of the first phase of its standard gauge rail line is almost complete. The line runs from Dar es Salaam to Morogoro and is expected to be operational in a few months. The project is being implemented in 5 different phases and ultimately it's designed to link Tanzania by rail to Rwanda, Uganda, Burundi and the Democratic Republic of Congo. With the details, here's CGTN's Daniel Kijo.
Tanzania's standard gauge railway project is the biggest in the country's history. The 2,500-kilometer project is intended to replace the country's meter gauge network built in the colonial era. At a cost of $6.7 billion, the railway development is expected to improve trade within the East African region.
The first phase of the project, meaning from Dar to Morogoro, which is about 300 kilometers, is at 90%, and we are now finalizing the last few details. The second phase, from Morogoro to Makatapora in Singida, is 422 kilometers. As you know, this passes by Dodoma. That lot is 55% completed.
This first phase will see the first regional station come into operation. The Morogoro SGR station will be able to handle 800 passengers a day and park more than 150 cars and motorcycles. When complete, the first phase will reduce the traveling time from Dar es Salaam to Morogoro from 3 hours to 1.5 hours. In a few months, hundreds of passengers will commute through this station. The government says that along with improving its transportation network, this project aims to provide employment as well as offer investment opportunities. Tanzania largely depends on road networks for cargo transportation. Much of the cargo will now be moved by rail. Engineers say the train is designed to transport more than 10,000 tons of freight at a time. This is equivalent to 500 cargo trucks.
So our purpose is to make as a logistic cheapest to transport those resources from Dar es Salaam to upcountry, and also natural resource from Congo DRC, which are rich in natural resource, and other neighbors to Port of Dar es Salaam. So our strategic first is to transport cargoes, then to give a service to passenger trains.
Upon completion, the SGR project is expected to pay back the investment within 15 years. The railway will be East Africa's fastest and will be powered by electricity.
The purpose of using this electrical energy is to make sure that we are providing a service at a low cost, because we have energy in Tanzania which is produced from our own resources.
The railway has a lifespan of more than 200 years. The Tanzanian government believes it will play an important role in helping the country reach its industrialization vision by 2025. Daniel Kijo, CGTN, Dar es Salaam.
You're watching Global Business Africa. Time for a short break. Here's what's coming up. Amazon founder Jeff Bezos steps down as CEO, but what lies ahead in his next act? And China's Lenovo Group, the biggest maker of personal computers, posts a larger than expected net earnings. The details coming up shortly.
Taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Welcome back. These are some of the stories making your headlines at this hour. Let's start with a continental view. African foreign ministers are holding their 38th ordinary session as part of preparations for the 34th ordinary session of the African Union Heads of State and Government. The meeting is being held virtually this time round because of the pandemic, obviously, but it's also made the issue of battling the pandemic its top priority. At the same time, the World Health Organization is also holding an interesting discussion on the latest figures about worldwide vaccine deliveries under the COVAX facility. The initiative was launched by the WHO and other agencies back in April. It aims to distribute at least 240 million doses of COVID-19 vaccines in the first half of the year. In a statement, the agency said the allocations would be subject to various caveats, including WHO emergency listing and countries' readiness and acceptance. The UN support mission in Libya has announced the results of the first round of voting to pick members of the Libyan Presidency Council. No candidate managed to get the 70% needed to win the first round of polling. The vote has shown entrenched divisions within the groups drawn from the three main regions of the country. And finally, in the Horn of Africa, a crucial summit aimed at ending a months-long standoff on elections is set to kick off in central Somalia. Polls have been delayed several times, with international partners urging Somali leaders to show unity. The leaders have disagreed, however, over the setup of the National Electoral Commission. That's a run through your headlines. Now, after 2 decades in charge, Jeff Bezos says he will step down as the CEO of the company that he built from a small online seller of books back in the 90s to an e-commerce and tech juggernaut with a market cap of $1.7 trillion today. He'll hand over the role to the head of Amazon Web Services, Andy Jassy, in the third quarter of the year. Now, the announcement came as Amazon reported a record holiday quarter with profits of over $7 billion, boosted by online sales amid global pandemic lockdowns. Bezos says he wants to spend more time on philanthropy, the Washington Post newspaper, which he owns among other interests. Jassy joined Amazon back in 1997 as marketing manager. He later on founded the company's cloud services division. It's one of Amazon's most profitable but least known units. Albert Hahn joins us now from New York with more data on this particular story. So Albert, Andy, of course, is a long-time head of Amazon Web Services division of the firm. A lot of us rely on it for our day-to-day activities on the internet, but we barely really know the ins and outs of it. Is his appointment a signal that this kind of services will be a central focus for the company in future?
Yes. So Andy Jassy has been leading Amazon Web Services since 2006 when the division was founded. Over the years, he's been seen as one of the top candidates for the chief executive role, in part because of his success in leading Amazon's cloud operations. Now, Amazon is well known for its e-commerce operations, but Amazon Web Services is the real profit engine. The latest fourth quarter earnings report shows that Amazon Web Services makes up more than 60% of Amazon's profits. The company, Amazon, is still dominating the cloud computing market, representing just under half of the total market share. But it is facing a lot of competition from competitors, especially like Microsoft. So in the next few months, as we see Jassy transitioning to the CEO role, we could expect Jassy to still maintain a close relationship with the division while bringing his experience and expertise to Amazon as a whole.
Indeed. So the transition, though, at other tech giants in the US has been a bit more clear-cut. I mean, Sergey Brin, Larry Page, they reorganized Google, stepped away from their roles as president and CEO, respectively. Bill Gates stepped down as CEO. He became non-executive chairman. Why has Jeff taken this route that still essentially gives him a foot both in management and the board?
We've seen several U.S. tech companies and their leaders transitioning into roles where they hand off their management day-to-day duties to other executives. And it's important to know that in Jeff Bezos' case, he's also left some of the day-to-day duties to other executives over the years. But it's important to note that Jeff Bezos is willing to step in when needed. We saw that last March when the coronavirus pandemic first hit. Jeff Bezos became involved in the day-to-day operation of Amazon, guiding the company and helping it navigate through the different demands as the pandemic continued. Now, as Jeff Bezos transitions into a chief executive, an executive chairman role, we can expect him to help transition Jassy into the CEO role. And at the same time, Bezos will still help Amazon's strategy, and he himself will focus on new ventures that Amazon is pioneering, such as space exploration, Blue Origin, and other projects.
Indeed. One last question for you, though. Amazon share prices up about 4% so far in the year. Virtually everyone, Deutsche Bank, JP Morgan, Mizuho, they all have a buy recommendation on the firm. Is the expectation here that Amazon will keep growing strongly even after 2020's blockbuster results?
Well, indeed, Amazon stock has been rated very strongly. In the last earnings report from the fourth quarter of 2020, the results went well beyond expectations of analysts. Amazon topped $100 billion in revenue. Now, analysts still believe that Amazon's core businesses will continue to grow, namely e-commerce, cloud services, and advertising. But there are some headwinds. Like other tech giants, Amazon is facing regulatory scrutiny from all over the world, and it is also facing employee activism. And these are issues that the company might have to address in this coming year. At the same time, there are also other headwinds, and people are not sure if Amazon can maintain the same record growth that it had in 2020, which was benefited in large part from worldwide coronavirus restrictions. As the vaccine rollout continues in many countries, Amazon may shift its focus to newer growth areas such as healthcare. But at the same time, Amazon's track record shows that it is a strong innovator and is able to make its way into new market segments when it needs to in order to maintain growth.
Indeed. Let's see what happens in Jeff Bezos' next act. Albertan in New York. Thank you. Now, at the start of the week, authorities in Dubai ordered bars and pubs to close until the end of the month in order to suppress a spike in COVID-19 cases after tourists flocked to the Emirate over the holidays. The closures took effect 24 hours ago, and they are among a raft of steps taken in response to rising violations of preventive measures. Indoor venues, including cinemas, sports venues, they will have to have their capacity cut in half. While Dubai's enormous shopping malls and hotels, swimming pools, private beaches, you know what, they must operate at 70% capacity. Restaurants and cafes must close by 1 in the morning. The government says penalties will be imposed on anyone who's found to be posing a risk to public health by deliberately disregarding and flouting these measures.
We do not want another lockdown. We got very tired and lost a lot during the first one. I hope that these measures will make the situation better in addition to the vaccinations, which will also help.
No, I think it was after New Year's. I think there was a lot of tourists coming in. I think there was a lot of mingling and meeting and probably more than people should have. And I think that's been shown in the last couple of weeks. And now the cases gradually come down again and hopefully stabilize and come down further, yeah.
We instructed most of the stores in the mall that there should be a specific number of clients in each store, and this number will vary according to the size of the store.
Back into the world of tech, China's Lenovo Group, the world's largest maker of personal computers, posted a larger than expected 53% rise in third quarter profit. The group's net profit was up to nearly $400 million for the quarter ending in December. Now, revenue was up 22% year on year to $17.25 billion. Lenovo's Intelligent Devices Group, which makes PCs and smart devices, also reported strong revenue over the quarter. The PC and Smart Devices Group reported revenues of $14 billion, up 27% year on year. This is Lenovo's second quarter of record growth, boosted by a rise in remote work and learning during the pandemic. Now, Facebook has stepped into more hot water over privacy issues. This time, it's through one of the companies it acquired, the hugely popular chat application WhatsApp, you might recall it, for the $20 billion in part that it paid for that firm back in 2014. CGTN's Mark New reports on why the messaging app is being accused of a failure to communicate.
WhatsApp users were given an ultimatum. Starting on February 8th, businesses would be allowed to take data from WhatsApp conversations and use it on Facebook. Users had to accept or no longer use WhatsApp.
I don't think it's right if they give you an ultimatum.
People using social media, you're not the user, you're the product.
What's troubling is you would think that in the scrutiny of Facebook right now,
is they would go out and get more collaborative input and share what they're doing and why they're doing. As they become and acquire more and more companies, what is the flow of data between all those entities and how is it being used?
WhatsApp responded by pushing back the changes to May 15th to give people more time to review the policy. It posted a clarification that the policy update does not affect the privacy of messages with friends or family in any way. It said the changes are related to optional business features on WhatsApp and provides further transparency about how data is collected and used. San Jose State University cybersecurity expert Ahmed Benafa says there's still a lot of information Facebook can access.
They look at your purchases, location, contact information, user contact, identifier, they even look at the user content, financial information, payment, location, everything you think about it. If you are communicating with the business in your messages about something, WhatsApp has the right to get that information and flag it so they can sell you more product on Facebook and Instagram.
Facebook has received a lashing on social media. Last month, Tesla CEO Elon Musk tweeted to use Signal, a messaging app that, along with competitor Telegram, has risen to the top of the download charts. Both Signal and Telegram feature end-to-end encryption, just like WhatsApp promises to do.
It's end-to-end encryption, which is true, but when you're going to apply it, that's the question. Signal, they're going to apply it all the time, for all communication. For the case of Telegram, and they're working on that, I have to give them credit. They store the information on, in the cloud, but they once you have it, once you start the communication, they apply the encryption. For our friends in Facebook, when you even talk about the communication end-to-end encryption, their definition is different.
Rival app Signal is a non-profit with the stated mission of protecting free expression and enabling secure global communication. Ironically, Signal's co-founder is actually the co-founder of WhatsApp, Brian Acton. He's no longer with WhatsApp and now calls his old company's privacy policy very confusing. Mark New, CGTN, San Francisco.
Quick run through commodity prices. The way the oil prices around the world have rallied in the first 5 weeks of 2021, you'd be forgiven for thinking there isn't an unprecedented pandemic in progress. Brent was up 2.25% at 15:45 GMT, approaching $60 a barrel. That it brings its year-to-date gain to around 13.5%. WTI not far behind, up 2.48% at $56.12 a barrel, up 15% over the same period. The oil production cartel OPEC did release a draft communique today stressing the need to speed up market rebalancing, so that certainly has, of course, amped up prices by a fair bit. Here's what's coming up next. We'll introduce you to an entrepreneur who's using an unlikely source to build a cleaner, greener Kenya.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Welcome back. One final story for you this hour. A Kenyan entrepreneur has developed a process to recycle discarded plastic waste into paving stones for use in construction. Zambi Mate's factory keeps plastic out of the landfills and offers a cheaper, conventional alternative to concrete paving slabs. Terry Wangari has a story on grassroots tonight.
Zambi Mate is the founder of Nairobi-based Genje Makers. The company turns polyethylene and polypropylene waste plastic into plastic bricks.
First of all, our product is almost 5 to 7 times stronger than the concrete, and this is because of the basic material structure of the brick itself. Our pavers, because they're made out of recycled plastic, and plastic is polymerous in nature, or rather it's thread-like. So therefore, it doesn't have a lot of pocket holes, therefore making it less brittle compared to concrete. So that's why it doesn't break very easily.
Mate is a materials engineer by profession. Being a champion of environmental awareness, she built the machines used to produce the bricks. With this passion, she sought to take matters into her own hands.
I was tired of being the sidelines. You're just there waiting for someone to sort the plastic issue. You're just waiting for the government or the municipality or just someone else other than yourself. So that was the first driver. And then the other thing was, it was almost out of sheer curiosity to see, can this happen? Because I had seen it been happening in different parts of the world, and I knew it could be replicated here in Kenya. We knew how to make one brick. So we needed to know, if we had to bring this product to the market, we needed to know how to make 1,000 or 5,000, because one project cannot be just one brick. So after figuring out how to make one brick, now the next step was how to make 1,000. Making 1,000, we need machines.
Genje Makers produces 1,500 bricks per day. The cost of the grey variety is $8 per square meter. Mate's factory has recycled 20 tons of waste plastic after she founded her factory in 2017.
It's affordable because we are in Kenya, and Kenya and in the larger part of Africa being a mass market, of course you have to be not only sustainable but also affordable, and hence the triple threat: stronger, lighter and affordable.
The Ministry of Environment and Forestry says Kenya produces 600,000 tons of plastic bottles annually, of which 400,000 tons are used locally, with only 9% of it recycled. For Mate, she hopes to add another bigger production line that would at most triple their capacity. Terry Wangari, CGTN.
Quick run through the currencies for you. One update from East Africa. Kenya Central Bank ran an auction today on 2 reopened long-term bonds with tenors of 15 and 20 years respectively. Demand relatively muted though, just 83.7% of the $454 million sought was raised, and the bulk of that was in the 20-year notes due in 2032. Coupon rates of 11.25% and 12% were on offer respectively. That's it for this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've heard on the program in the last hour. Many ways to get your thoughts back to us. All of them are on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.